In this video, we're gonna talk about CFDs. What are they? How can you make money off of them? What are the pros and what are the cons if you start trading them? Check this video out. Hi everyone, this is Marvin German. I create daily videos on how you can trade and how you can win in the financial market. So if you're new to this channel, subscribe, smash that bell so you get updated every time I create new content on how you can trade and win. So enjoy the video. Hey everyone, so this is the video that you've requested. I've been getting a lot of questions about what are CFDs, what are the pros and cons of it, what are the things that will allow you and push you to invest in it, and should you really get into this. So just so you get a framework also of what this is, when we're talking about CFDs, we are now entering the realm of derivatives already. This is not just anymore you investing in the stock market, but this is you investing in derivatives. And by the way, I'm using this new format again where I'm just showing you my screen, that hopefully you guys get a lot of value from it, as well as compared to me just showing my face and talking. So basically, let's start from the beginning. What are CFDs? CFDs basically stands for contract for difference. Contract for difference basically is a trading method that enables you to trade and invest in a stock by engaging a contract between you and a broker. And by the way, for the rest of this video, the broker that I'm going to show you is eToro, and I've been showcasing that over the past few weeks because it allows us to have exposure to other markets outside the Philippines. So this, if you are a person that wants somehow, no, you want to earn not just from Philippine stocks, and you want exposure and you want diversity in your asset portfolio, it would be prudent to open accounts outside the Philippines as well. So back to the definition, instead of you opening a position, or instead of you buying a stock or any asset for that matter, a commodity like oil or a cryptocurrency, which is another asset, instead of you opening a position directly on a stock exchange, you get to buy a contract between a broker that engages in stocks, and everything is directly proportional to that. So you and your broker agree to replicate the market conditions and settle the difference when the position closes. Meaning, if I want, instead of me just buying shares in an exchange, I go for a contract with the broker, with eToro, that if this certain stock goes up, I also benefit from that stock going up as well. But in the same way, to balance everything out, if this stock goes the opposite direction and it goes down, I also will share the exposure of that fluctuation headed down. So it's not something also that's a perfect scenario that you will make money all the time. It's also something that if there is a risk attached to the investment you're putting your money into, you also share in the risk if it goes on the opposite direction and it goes down as well. So another definition, to put it simple, you are not buying the stock, but you are buying a contract that tracks the movement of the stock as well. So if you go directly to the stock exchange, you buy McDonald's, you become a shareholder of McDonald's. But for this one, for CFDs, you invest in a contract that allows you exposure to McDonald's. Meaning, if McDonald's stock goes up, I share in the ride and I make money off of it even if I'm not a shareholder. And if it goes down, I share also on the downside of it and I lose money as well. An example I could give you is Apple. When you go via CFDs, you are not buying Apple's stock, but you are generating exposure to Apple. You have a contract that says that if Apple stock moves up by 10%, I also will benefit from that movement up. If Apple stock goes down by 10%, I also will share on the risk and the exposure of Apple stock going down. So please get, the main difference is that if I go to the stock exchange directly and I buy Apple stock, what happens there is this: I become a shareholder of Apple. I get to share on all of the benefits that Apple shareholders would have. I get to have voting rights as well. But if you go the route of CFDs, it means that I have the right to have exposure to 10, 100, 1,000 shares of Apple, even though I am not really a shareholder of Apple. So the main goal, the main ideology of this is that basically you would earn off of the appreciation of the stock. And the difference also, and what's nice about CFDs is that, and I've been making videos about this, is you can go long and short, meaning you know about what going long means. If the stock price goes up and you own the CFD of that stock, you make money. But another advantage of a CFD is you can go short, meaning if the stock that you are watching goes down and you go short, you make money also on the opposite direction. You make money as the stock starts to go down. So let's drill in further on how CFDs will work. And comment below right now if you are learning from this. Comment below if you have any specific questions about CFDs, and I'll try to make more and more videos about it. Comment CFD if you're liking the idea. Comment I need more explanation if you want me to drill down into a more detailed and more in-depth explanation on how this is going. So basically this, if I want to invest in global markets, for example, Google, Facebook, Amazon, Microsoft, or any other underlying asset class like Bitcoin or commodities. But for this example, I want to focus on the stock market. So if I want to buy Amazon, the trick there is this. Amazon is basically at this screenshot 1,838.55 US dollars per share. So meaning if you want to buy one share of Amazon, you have to shell out almost 90,000 pesos just to buy one share of Amazon. And for a lot of people who are starting, who are a bit conservative, they may not want to shell out that exact amount just to buy one share. So the biggest advantage of buying CFDs is this. You have the opportunity to be exposed in the stock market or to buy Amazon stock by just putting a fraction of that amount. What it actually means is you don't need to shell out 1,800 plus US dollars just to have exposure to Amazon. So what does that mean? What's nice about CFDs is you can buy a share, you can have exposure to Amazon for a fraction of that amount. So for this example, for eToro, to have exposure to Amazon, you only need 50 US dollars to have exposure to it. That is if you are wanting 1:1. But the main point and the main goal and the main context of this is that, hey, I can have exposure outside the country. I can have exposure to technology stocks, even if I'm just putting a very, 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 very small amount in it. So that also means that, hey, for $50, I get to at least double. For $50, I get to try. For $50, I get to see how it works and I get to see if it's for me or not. Because what I want to share to you guys is this. Before you put large amounts of money in anything, the goal of what you can do is basically this. Just put a small amount first, see if it works for you, see if you like it, because if you like it and it works for you, that's when you start scaling it up. Because the goal is to be faithful with little, to be good with little, because if you're good with little, later on you will have the skills, you will have the experience, and you know what to do at that point in time. But here's the thing also, why do a lot of people like CFDs? Why, aside from you just putting a small amount of money, why is CFD so popular? CFDs are so popular today because you can utilize leverage. Leverage means that for a small amount of money, you get to have exposure to a larger amount. You get to have exposure to larger volatilities and larger swings. Let me show this to you. The same screenshot, but this time instead of using X1 or 1:1 leverage, we are doing and we are using X2, meaning this, whatever movement, you get exposed to twice the movement, twice the volatility as well. So that actually means that, hey, if I place $50 and then suddenly Amazon stock moves up by 2%, since I'm leveraged by times 2, I get to earn 4%. So that's how you can actually spin it and that's how you can actually analyze it. But let me push this further. If Amazon, and if you put a leverage of 10x or times 10 leverage, if Amazon stock goes up by 2%, since you're leveraged 10 times, you earn 10%. So think about it. In the stock market, a stock goes up 2%, you earn 2% if you're directly invested in stocks. However, if you are leveraged, you are using CFDs, it only has to go up by 2% and you now earn 20%. That actually means also that if you place $50, it goes up by 2% and you're directly invested in stocks, you only earn $1. However, if you're leveraged by times 10, 20% means that you earn $10 for the $50 that you've placed in it. Pushing this idea further, look at this. $50, I will leverage this time 20x or times 20. It means that if Amazon stock goes up by 2%, I earn 40%. So that's amazing, no? Instead of earning a small amount of money each time it fluctuates, you now get to have the ability to earn at a much larger pace because you are leveraged. So, but also just to give you a word of warning, a word of caution, because I want to be balanced also, please remember this. When you are starting to do leverage, when you are leveraging, your risk becomes relatively bigger. You're exposing yourself to a larger amount of risk. Why? Because if Amazon stock also goes down by 2%, it means that, hey, you are risking yourself to 40%. Meaning, 40% of $50 is around $20 already. So that means you are losing $20 instead of just losing $1 if you were not leveraged. So this is similar to what I've been talking about before. High risk, high reward. The greater the risk that you're putting, the greater the reward. However, if it goes the opposite direction as well, you have the chance to lose more. And just to manage your expectations in the stock market, if a stock goes down, you can hold it for a very, 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 very long period of time and still be a shareholder and still reap the benefits of it should the stock go up later on. But here's the difference if you're using leverage. If the stock goes lower and the amount of what you're losing is more than the amount you put in, your position will be closed and your position can go to zero. Meaning, if you do leverage, you can lose everything that you've put in as well. So this is just me giving you a balance into everything, that do not just get blinded by the possibility to earn. You also have to figure out that, hey, there's a chance for me to lose everything here as well. So I suggest this is good for short-term trading. This is good for people who have at least short to mid-term horizons, because I do not suggest this if you are just looking at it as an investor. Why? Another thing you must consider is this. There are, if you look at the bottom below the set order, there are overnight and weekend fees. Meaning, the longer you hold on to this, you are paying fees on a daily basis, or if it spills over through the weekend, you are paying weekend fees as well. So meaning, you cannot hold on to this for 5 years, because if the stock is down and it's down for a extended amount of period of time, you are paying fees as well that you will incur on a daily basis. So meaning, if it goes above and beyond what you have placed in, also your account can go to zero as well. So this is I highly suggest this for people who have short-term durations. I highly suggest this for people who are trading, especially if you're putting more leverage. Look at this. As I try to increase the leverage from 2 times to 10 times to 20 times, look, you will see the overnight fee also start to increase as well. So my suggestion, these are for traders, not for investors. These are for traders who want to have a larger swing, larger exposure, who want to earn off volatility. These are for people who know how to use technical analysis. These are for people who know when to exit and when to come in. These are for people who have less emotions. These are for people who know how to act quickly and will decide based on what the numbers and the charts are telling them. And this is something that's very good because it exposes you to larger amounts of gain with a small amount of capital you put in, but also in the same time, it will also subject you to the same amount of risk. So again, just a disclaimer, I hope you just use this as information. You use this as something that you still need to analyze it if this fits your risk profile, this fits your risk tolerance, because at the end of the day, this will also give you a greater amount of risk as compared to directly investing in the stock market. So I highly suggest that you study this carefully, but if you know what you're getting into already and you have the confidence and you know you have the skills for it, by all means, go for it. If you want to know more about it, I have links above that will tell you on how you can open an account to invest in CFDs. I have a link below also if you want to open an account with eToro, and how you can have a virtual account where you can practice and you can try this without putting any money to begin with. So the links are down below. So putting everything together, let me show you how you can make the trade for CFDs. That it just looks like a normal stock that you buy and sell across the stock exchange. So just click trade. As you start clicking trade, the stock that you want to buy will actually come out. Now, if you want to put, say, like just $50, you can still buy. You can still buy Amazon just by $50 as well. Now you can change the leverage. Now, if you just put 1x1, it means that it's 1:1. You are not borrowing any money off of it. If you put x times 2, meaning you're leveraging times 2. And as what I showed you earlier, this is times 10 and this is times 20. As you can also see, as I increase the leverage, you will notice that the overnight fee and the weekend fee also increases as well, and your risk and your exposure also would increase. And it's also proportional, that if, say, I put 100 USD, I start, say, with times 2 leverage, my exposure becomes much bigger every time I increase the leverage altogether. So just, it's very simple. If I want to make the trade, I just click open trade and then we're done. So it's as simple as that. If I believe like Netflix is gonna go down, I believe that based on my analysis, it's gonna go down. CFDs allow me to be able to short sell the same way, leverage also. So if I wanna short sell Netflix with 1,000 US dollars, and then I can also put leverage into it. But you have to remember, every time you put leverage, it becomes more expensive. Every time you put leverage, you put more risk attached to it. So it's not just that you are short selling, you're putting an amount of risk when you short sell, you are also putting another amount of risk when you start putting leverage. So if you want to open a trade and you short sell, just click open trade and you're done. So how did you guys like the video? Did you guys enjoy learning about CFDs? What's nice about this is it adds to your arsenal of how you can somehow increase your potential of earning. In the same way, since you're using leverage, it's a high risk, high reward proposition as well, that if the stock that you are planning to buy goes in a certain direction, you can also lose a certain amount of money, which is massively larger as well. And since you're using leverage, you are borrowing money, meaning the longer you hold onto it, the more fees you also will incur. So my suggestion also, CFDs are good, especially if you're trading short to mid-term durations as well. But if you plan to be a long-term investor, it might be beneficial buying the actual stock as well. So to summarize everything that I talked about, CFDs allow you to have leverage, meaning you don't have to put a large amount of money to buy a certain stock. You can put a fraction of the price for you to be able to have exposure to the largest companies in the world. Number two, since we're using leverage, a certain swing upward can give you larger amounts of money, but a certain swing downward also can give you larger amounts and larger losses as well. So again, high risk, high reward. And since you're using leverage, it means that, hey, you are borrowing money. The longer you hold onto it, the larger fees also you will incur. So again, this is for people who would want a larger degree of return, but somehow expose themselves to larger amounts of risk as well. That's why my suggestion is you study it, you analyze it, because the way for you to win in investing, the way for you to win in trading is to come in knowing the risks, knowing the rewards, and knowing full well of what you're getting into. Because at the end of the day, CFDs will work if you know what you're doing. CFDs will work if you're not emotional in your trades. CFDs will work if you know how to use technical analysis and you know when to take profits and you know how to cut losses. So everything we talked about in technical analysis for Philippine markets will work here. Please also remember, if you are buying CFDs, you are not buying the exact stock. You are not being a shareholder. You are just buying a contract with eToro that allows you to make money off the difference of the fluctuation. So if it goes up, you make money. If it goes down, you also lose money. But you do not own the share. You do not have the rights and the privilege of a shareholder of a stock. You are merely buying a contract, or what a lot of people call a derivative. So that's it for now. I hope this video gives you the right information, the right knowledge on what CFDs are, so that you can start. This is something that you know fits you, you can start investing and trading and making money off of it. Because the heart and the goal of this channel is to provide you with the right information so you can win, so you can trade, so you can use investing and trading the financial markets to reach your goals of financial freedom. So this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.